Welcome to Copper's latest opening bell report. Today, we're talking about the record runs in gold and how it stacks up against Bitcoin, plus a look at major moves in the institutional blockchain space. Let's start with gold. It keeps smashing all-time highs week after week. Year to date, gold returns have surged more than 47%. Now, if we look at Bitcoin, it's up about 22%, less than half the gain we've seen in gold. Both assets get talked about as scarce stores of value, but their supply and demand stories couldn't be more different. What makes gold fascinating is its relentless supply side. Every year, miners pull up about 4,700 tons of gold. At today's price of $3,800 an ounce, that's roughly $575 billion of new supply hitting the market annually. The upshot? Gold needs around $500 billion in fresh demand every year just to stay even. Even during those record-setting years when central banks and investors pile in, the market usually ends up with surpluses. In fact, over the last decade, the gold supply-demand balance shows a cumulative oversupply of $511 billion. One of gold's biggest challenges is that when prices go up, new supply floods in. The mining industry responds quickly. Higher prices make lower-grade mines profitable, old projects get restarted, and operations expand. You also see more recycling. People sell their gold when prices spike. So the cycle continues. Higher gold prices spur more supply, which means even more demand is needed just to keep momentum. That's why you see that same 4,700 tons every year, whether demand is booming or not. Over time, this pattern leads to supply overhangs that can actually hold future prices back. Now, let's bring Bitcoin into the mix. The numbers here are a stark contrast. At today's block reward of 3.125 BTC, annual new Bitcoin issuance adds up to about $19 billion. Here's what's remarkable. ETF inflows in 2025 have already topped $19 billion. More than covering all the new supply before counting in retail or institutional allocations outside ETFs. Structurally, Bitcoin just doesn't need as much extra demand to keep prices up or to push them even higher. Scarcity is where the comparison gets really interesting. Gold's stock-to-flow ratio, which is just the total supply divided by annual new supply, stands at roughly 42. Bitcoin's is 125, about 3 times higher. In plain terms, Bitcoin is far scarcer by design, yet its market cap is only $2.3 trillion compared to gold's $25.8 trillion, a fraction of the size. Turning to digital assets and permissioned blockchains, the past decade saw plenty of industry attempts, but none matched the ecosystem scale of the Canton network so quickly. Just over a year since launch, Canton boasts big names: Goldman Sachs, HSBC, Broadridge, building shared infrastructure that's getting real traction. Its members range from GSIBS to global clearinghouses, with Broadridge alone processing more than $5.9 trillion in tokenized US Treasury repos every month. That scale easily outpaces most public blockchain volumes. Ownership and validator activity are also heating up. A quick look at the leaderboard shows Copper in the top 10 validators this past month, according to The Tie. Top exchanges like Binance US, Crypto.com, and Gemini are running validators, which could hint at future Canton coin listings, though nothing's confirmed yet. Kraken has even flagged a potential listing on its roadmap. Notably, these are mostly US-based exchanges. If Canton Coin gets listed on retail exchanges, it would be a first. No major public permissioned blockchain token has ever gone fully public, especially not backed by the kind of institutions Canton has behind it. The network's stats are going vertical. Cumulative unique parties and daily transactions have surged. Just to give you a sense of scale, by the end of September, Canton saw over 500,000 daily transactions. For comparison, that's more transfers than USDC and USTT combined in the same period. Ethereum did about 1.3 million transactions, showing Canton already has significant activity, most of it from institutional players working on just a handful of applications. It's still early days, but positive regulatory trends seem to favour Canton's configurable privacy and interoperable infrastructure, key solutions to challenges public blockchains still face. And institutions are getting tactical about common platforms. Versana, with founding members JP Morgan and Wells Fargo, now has 7 GSIBs sharing real-time syndicated loan data. Goldman Sachs' DAP platform has facilitated major institutional tokenized bond deals. That's it for today's deep dive. Thanks for tuning in to Copper's Opening Bell. For more detailed information, don't forget to download our full report.